Hello and welcome to Zak's Traders Cafe. Today I'm joined by Christopher Nicholson, who's Managing Director at ACF Equity Research. How are you today, Christopher?
I am very well, Zach. It's going to warm up a little bit, I think, today, but apart from that, all very good.
Oh, it's terrible, isn't it? Every summer it's the same, isn't it? It just doesn't stop, does it? It's
I
relentless.
know. I don't know why I don't learn.
But anyway, I was going to say that the highly polished Christopher Nicholson, but I think we probably, people already know that by now, so that's okay. But it does kind of lead me on to just the sort of side issue, slightly related to the news we've had this week, or the news I've sort of seen this week, that apparently prime London property prices are falling like a stone. So you're going from 25 million for a big mansion in Mayfair to, I don't know, 12 or 10. I mean, something horrible, something cheap like that, right? Which is an opportunity, obviously, for people like us. But the statistic has been since the new government came in that, 1 millionaire is leaving every 45 minutes, which seems quite a devastating figure. Apparently, the top 1% pay like a third of the taxes. So I worry that there'll be nobody left to pay for all the things that we need. But my question is, raising taxes or the fear of raising taxes has caused rich people to leave. If you lower taxes and presumably then lower welfare, would less rich people leave? Would that be a way of would the population change?
I think that's a really interesting way round of looking at it. I'm going to dwell a little bit on the what's the issue with wealthy people leaving? Why is that problematic? I think if your suggestion is that there's a better welfare system in Germany and Sweden, for example, and would if we lower taxes and if the consequential impact is that our welfare resources are further squeezed, would people migrate to a better environment? Well, they would, except we have Brexit, which would stop that for now. But yeah, in principle, people go to where things are better. But I mean, I think remembering that migration is really driven by hierarchy needs. So if you've got no home and you've got no food and you're in danger of dying in the immediate future, anywhere looks better. So migratory flows are usually driven by that kind of thing. But small flows are definitely driven by less Malthus driven sort of or sorry, less hierarchy of needs issues, such as I do this job and it's better paid in country X, the weather's better, the infrastructure's better, and it's not far for me to go. So yes, I'll go there. So migratory flows are also driven by that, but they tend to be the smaller ones. Um, so the straight answer is if we didn't have Brexit, yes, probably. But as we do have Brexit, it makes it harder if you're going to do it legally. Let's put it that way. But I think what's more interesting is going back to your question about is there a real problem with the super wealthy and the very wealthy leaving the country? First of all, Zach, I would query the numbers that they're responsible for 30% of tax. I'm not sure their tax take is really that significant, but what I do think is really, really important is that those Mayfair mansions are coming back to a price I can digest. That's my key point. But more seriously, what is important is the migration of capital. And that is never a good thing. You can look at that through history. You can go back to prehistory to the great civilizations, etc., and as they collapse. And I mean, essentially, it's the same thing. You get a migration of capital. And so that is not a good signal. You don't wish to have an environment in which capital finds it unattractive. There is a bit of a counterpoint in that we clearly attracted a lot of money that could do with a bit more, shall we say, oversight as to its origins and what it's doing here. Um, but you get that with any bustling large economy. So really the issue is we need to make things attractive. We do want clean money rather than questionable money. We don't want to be a center of money laundering because that's not value generating. That undermines trust. But yeah, it's an issue, and we're looking at a much more restrictive tax rate. And the thing is, we're not like Sweden and Germany. We don't have the infrastructure that justifies it. And it would take 20 years to build an infrastructure that would justify that tax take.
I think the message that I have had in the last, because obviously we're coming up to the first anniversary of of Labour being elected, is that Labour doesn't care about anything else, literally nothing else, apart from Labour votes and Labour voters. And so that it doesn't care about it can it cares about that first. It doesn't care about money, doesn't care about the economy, doesn't care about people's feelings. It just cares about how many people are going to vote Labour next time around. So those millionaires were never going to vote Labour unless there's sort of one or two champagne socialists or people who work at the BBC or whatever it is. So they were never going to vote Labour. The farmers were never, and especially now, are not Labour voters. The pensioners, mostly, they're the sort of the old codgers. Well, they weren't going to vote Labour either. So they are totally voter driven, and that explains everything they do. So that it's not a government which has any interest in even the tax take. It doesn't care about money either. It doesn't care about CGT is raised, they lose money. They don't care. They just care about voters, about people voting Labour, creating more of a voting base. So obviously, the whatever the figures are for migration, not they're expecting all those new people, whether they're illegal or not, to vote Labour. So it's all about gerrymandering the population or making both of us poor, so we'll vote Labour. For in 5 years' time, when I need a state pension, I'll vote Labour. It's all that minimum wage. It's just nothing. It's not. It's totally. It's not even ideology driven. It's just to do with it's vote driven. And once you see that, you see that whatever they've done in the last year is not incompetence. It's perfect. It's absolutely perfect according to trying to create more Labour voters. Even the Chagos thing, the more you weaken the country and impoverish the country, the more people will be impoverished themselves. You sell like Gordon Brown sold the gold. Try to sell part of our gold. All that, give away the empire. They've been doing it for since they came into power, into governments. Everything is designed to impoverish people, impoverish the country. So we're all leveled down, and we'll all vote Labour. And
well, the Great Socialist Project, which is to interfere in the family and encourage people to be dependent on the state,
yes,
I think is what you are detailing there.
so VAT on private schools is precisely to stop creating privilege and people perhaps talking like me or trying to talk like me. And a lot of people I met, they just that they just want the kids to have a posh accent. I mean, that's it. They would not to speak like them. But the goal, that's a perfect example. They won't make any money out of that. But they'll, 20 or 30,000 pupils who've gone to state school obviously dependent on the state. I mean, that's literally but when you think about it in terms of raising money or economics, socialism doesn't do economics. It will just, it can,
No, it's we step neatly really into rate policy, inflation, etc. with this because in the end, I think you touched on it, which is that in general, left of centre governments tend to take the view that they'll borrow their way out of the problem. And with that old relationship of if you are the borrower and you can raise inflation, you essentially reduce the burden of your debt. So as a government, of course, you have the ability to inject inflation and you have every incentive to do so, essentially, in order to reduce the debt burden. So if your policy is to borrow your way out of it, which speaks to your point, they don't care about the tax take, they don't care about the economy because they intend to borrow. And your distillation is that they intend to borrow essentially to buy votes in order to maintain their position of power. That's their model. In order to do that, they need to eventually inflate away the debt burden, or ideally leave it to a different government temporarily before they come back.
They don't care about the debt burden, all they because the taxpayer will pay, and the more the taxpayer has to pay, the more poorer people, the less entrepreneurs there will be, and then therefore the more people vote Labour. It's totally about the vote. They don't care about the borrowing. They don't care about how much money's around. It's totally about getting people to vote Labour, and that's it. And so, we'll give £2 million to this, we'll give £5 million to that. It's they've got endless supply of nice policies to give to the basically buying votes. So, but I think in terms of what they've done in the last year, they've been spot on if they're trying to create either to pay off Labour voters or create more Labour voters. So that is their goal. It's nothing to do with economics. It's only to do with what you write in the ballot box, which is a fair way to go, right? I mean, but it is. I do regard it as a gerrymandering, impoverishing the country and giving handouts to people who do nothing is rewarding failure and punishing success, all that stuff. But it's totally to
Yeah.
create votes.
So I think the best you can say with that, Zak, is that they're highly conflicted because the people that they are providing support to are the people who are most likely to vote for them. And that whilst they see a political imperative to reduce migratory flows, they're still conflicted because the people that arrive inevitably will have to take advantage of state support, and so inevitably will be predisposed towards voting to the party that they see as strengthening that support and giving them that opportunity. That's the conflict.
Yeah, so you just said, I mean, that's exactly what I'm getting at. So their attitude to migration is actually bring it on. I mean, obviously everything they say is almost like the opposite anyway, because they can't reveal that all they're trying to do is maintain Labour voters or create new Labour voters or bring in new Labour voters. The problem with a society which becomes progressively richer is that it becomes progressively more conservative in the sort of the general sense and in the economic sense. So that's a problem. You have to stop that as well. So if Thatcherism we maintain, and all of a sudden we are like Switzerland, or all of a sudden became very very rich, or like Norway or something like that, the Labour would get 5% of the vote or 10% of the vote. It's still in the game because obviously things have not gone well, the pandemic, this and that, and stuff like that. But anyway, you did mention, I think.
Interest rates,
No,
inflation.
no, we actually mentioned money laundering. That brings me on to very neatly onto Bitcoin, and
Okay.
because obviously it's a money launderer's paradise. There, it's the best thing. And if you have if you're a third world or developing country leader and you're trying to escape, you can't take these gold bars on the 747. You just take your Bitcoin wallet, your crypto wallet. Is that right?
I mean, that is certainly a physical truth, Zak. Yes.
And if you
And
haven't thought of that,
clearly,
any leaders out there who haven't thought of that, that's the best thing to do. Just forget, don't bother with anything else. Just with your little.
yeah, I mean, it's I think you're aware that we've taken the view for a little while now that fiat money in the mid to long term is nonsense, and that central banks will issue their own cryptocurrencies at some point. So the argument that crypto is the future, uh, we subscribe to. It's just, logically it's the future, and central banks can issue their own crypto if they want to. And why on earth would you bother with moving dore around and paper and coins? You just wouldn't. And you can see economies are going that way anyway because of electronic transactions. I mean, how many coffee shops can you go into now where you can't pay with cash?
Yeah,
So,
but isn't the other point that literally if you're dealing with your local, First Direct or whatever the other banks are, Barclays, this and that, you move, you want to send.
Revolut,
I
etc.
want to, yeah, but I know, but if I'm on, I phone up First Direct and I say I want to send 50 quid to my 93-year-old father. It's like as if I'm sort of like, so what's it for? What's he doing at the moment? What are you doing? All that sort of stuff like that. If nothing else, just and it's like actually it's for his live-in care. He's in a wheelchair. He's this. It's like it's none of your business, right? So the use of proceeds is like really none of your business. And have they forced you into sending this 50 quid? Do you know, how do you know this person? Actually, well, unfortunately, I've known him for 58 years. It's literally, it's absolutely ridiculous. So I can understand, just in terms of that alone, why you just want to have your money away from that sort of retail banking rubbish that we have at the moment. It's completely mad. And also, obviously, if it was a con man, they wouldn't help me either.
Well, that's true, but I mean they have to do something. The cons have got, in their defence, Zak, to have a balanced discussion about it. Whilst I agree with your
Oh,
sentiment, I
there's no
think, you know,
this,
we've
this
got to
is not
say that
this is not
that
a balanced
they have
discussion.
been driven to this absurdity by criminals funding their activities and perhaps washing those activities via crypto, for example. But I think, are we getting to, what about crypto treasury strategies
Yes, I
or
was just getting to
small
that.
public
So
companies?
I was just enjoying my rant, my normal weekly rants on various subjects.
I
The
don't wish to curtail it.
No, it's fully contained now. I stand corrected and chastised and everything. So I did actually. The original thing I wanted to get onto this week was Bitcoin Treasury strategies and Bitcoin Treasury stocks. I've been slightly trolled by people, well, one or two people, sort of saying, the bubble, it's a bubble that's going to burst, and then obviously when it bursts, then how could you sleep at night and everything else, but forgetting the bit where the shares went from £1 to 100, 1 to 100 rises. And when they were one or two or three, I said, well, this looks like a technical, it's got a good look to it. And I think it could be a 5 or 10x, and obviously some of them became 100x. If they then come down again, but are still 10x or 20x, should we be crying? And is it a bubble? That's my question to you.
Okay, so I think it's a really good question. It's very topical and it's very interesting. So if you will allow me, I am first of all just going to do a very quick summary of the accounting implications. And then we can understand better what the implications are of having a crypto treasury strategy or a Bitcoin treasury strategy. So the first thing is, there are three major accounting systems. There's the UK that are adopted. There's the UK, the US, UK GAAP, US GAAP, and then you've got IFRS. Well, what is interesting in these things is US GAAP's about to change. Crypto will be under intangible assets, but defined as crypto, and it will have to be marked to market at every accounting period. So if you are reporting quarterly, you're going to have to quarterly mark the value of that crypto. The changes will be written off through the income statement stroke P&L. IRFS and UK GAAP are taking a different approach. It will still go under, or it still goes under intangibles. So for IFRS, it comes under IAS 38, and for the UK GAAP, it's under FRS 102. But they basically say the same thing, which is that it goes under intangibles, even though we here think of it more like cash, but it goes under intangibles. It is booked at cost. So let's say you buy $1 million, you book it at $1 million. It can technically be revised upwardly, but the rules are such that it is almost impossible to get that through. So it is only revised downward. And let's say you book it on a date, and unfortunately, crypto's taken a 90% cut for 3 days. So you got 100,000 left of your million. It'll be booked down at $1 million. That loss is written through the P&L, which is important for something I'll come to quickly. That loss is written through the P&L. And if you want, the only time you can get that value back on the balance sheet is when you then sell the asset. So essentially, you lose it, it declines. So the direction is decline, but only at the accounting date. It goes through the income statement or P&L, depending on which term you like. And then in the UK and international accounting, you can only crystallize the value back if it jumps up when you come to sell it. So the US system is better geared to deal with it from an accounting point of view, because mark to market is better. From an investment and analyst point of view, But here's the real kicker. It's the scale. So first of all, it really depends on the scale. How big is the treasury compared to the rest of the balance sheet? Because it's a volatile asset. The overall strategy directionally is really, really fine. But the issue is that if you're a small or mid-sized company, you take a big treasury position. We've seen a few stories where they've taken a bit and then it's worked really well. Then they've gone and they're raising 10 million or etc. It adds a huge amount of noise to whatever their underlying business is, unless that underlying business is something to do with fintech or is crypto trading platforms or whatever it is. So if you're a miner doing it, it adds a huge amount of noise to the income statement, the balance sheet, and the EPS. It's extremely unpredictable at the moment. Nevertheless, it is a supportable long-term strategy given the direction of electronic currency. So I think there is an argument to say, this is quite painful. It's the fashion of the day or the week at least. So whether or not you recover if you get a hit, I think you probably should, but it depends who you've attracted to the stock. And I think you've pointed out, Zak, that, and we've certainly talked about this as well, that if a mining company can add a tech aspect, or if a mining company can add, say, a crypto aspect, then you do broaden your investor base, and that's got to be a good thing. My only concern at the moment might be that a lot of crypto traders look at things on a daily basis. That's not good if you're a mining company because it injects volatility to the share price, which is, very extreme volatility to the share price, which personally, I don't think the kind of investors a mining company should be looking for, or any company should be looking for, really is day trading. Create some liquidity, but you need a base of stable investors that will help support the project.
But we've had
You
this.
look grumpy that you're not agreeing.
No. I'm grumpy because I hate the whole accounting system. I think that's complete. It's ridiculous. It's worse than Alice in Wonderland. I suppose from what little I understood of what your explanation, because I'm not, obviously not, I'm not Einstein in these matters. There is a chance that if you're a small operating company, you buy some Bitcoin, the Bitcoin goes down 90% on the day of the end of the accounting period. It'd be quite a good way of avoiding paying tax, or it would be a tax loss or something like that. Is that true or not?
If it's an intangible asset, you write it down. It depends if it's depreciated or amortized. And I can't remember what the answer to that is. If it's depreciated, you don't benefit from it. If it's amortized, which it probably would be as an intangible, then yes, you ought to be able to set that off against corporation tax. But I think, it's more to the point you get caught out as a smaller. It all depends on scale. It really does. It depends on the scale compared to your balance sheet. And my main issue would be, as a research analyst, that my main issue would be, hang on, this company is supposed to be, I don't know, selling advertising space over the net. And yet its balance sheet is dominated by crypto treasury, which is very volatile and will kill my EPS forecasts. And I can't do anything about it. So that's how I would look at it, or would kill my free cash flow forecast. Well, it wouldn't kill those, but it would kill the EPS forecasts. That I don't like EPS as a measure, but an awful lot of investors still use EPS, both institutional and retail, still use EPS. My problem with it is it's non-comparable across countries, and I think everybody should be thinking about globally about their choices of stocks, not just their home nation. So I much prefer free cash flow as a measure. But the problem is that EPS gets horribly distorted by things like this. And it makes it messy and difficult to understand what's been going on.
Well, it's already messy anyway, so that doesn't really matter too much. But
Okay,
next
that's
next
true.
next week I'll get somebody from HMRC to come in and go through the whole thing. I'm sure they'll have an answer either. I mean, it is mind-boggling. But
No, they haven't got an answer. They don't like it. And they're doing what they can with it, but they really don't like it yet. Probably because they don't feel they can really cope with it, and they don't feel they really understand it. But I would argue, sort of without having put a huge amount of intellectual thought into it, I would argue that the US treatment of crypto with mark to market is better from an investment point of view. Might well turn out to be a lot more painful, but I think it is better from an investor point of view. With
Yeah,
the other way around, you get a bit of shielding, because if you get lucky, crypto falls, you don't have to write it, and it's not at your accounting date, you don't have to write it to the balance sheet.
yeah. I
So
think I did a bit of research just because the name of MicroStrategy came up, and apparently they're
sorry, until the end of the year, Zach. Sorry, you get 12 months to up to 12 months to figure out the problem. That's what I mean. You buy time.
yeah. So the I think the main question now, because the prices of the stocks in this area have they're 80% down or 70% down from the top or whatever it is. So obviously, a lot of people were caught out because the strategy of many of these companies was to keep raising as the price goes up. So you almost have a sort of pyramid of disaster if the price comes down. Because they're raising more and more at a higher price.
Mm.
Which means it is an inverted pyramid, isn't it, in terms of the people in the stock? So it's a horror story in that way. But the sort of the $64,000 question is, what should the MNAV of a company with the Bitcoin Treasury Strategy be? So what multiple of the value of the Bitcoin that they have? Say they have 5 Bitcoin, and that's worth 500K, $500,000. This week we had MNAVs in some of the players, or in the last couple of weeks, of 20 or 30 times the value, the face value, let's say, of the holdings that they either have or say they were going to buy. So if MicroStrategy is on two times multiple of the Bitcoin it has, which is actually very generous, because we've seen in the stock market in London, most investment companies, they're trading at NAV or lower, sometimes half NAV.
Yeah, discount to NAV.
Yeah, Seed Innovations from memory was trading at half NAV, and or even half. There's a half NAV, half cash. I mean, all the horrors that you can have. To underline, there's no point being listed on the stock market. Those horrors. And whereas if you're private, you can just make up your valuation, which it seems to be a much better thing to do. Is there any, just to put you on the spot, would you say that if somebody's in one of the Bitcoin Treasury Strategy stocks now, and they're trading at 5 or 10 or 20 times MNAV, they're probably going to be a little bit vulnerable on a sort of longer term basis once the dust settles?
All right, so you've got two dynamics there. One, what do you think the asset's going to do? So if you think the asset's at the beginning of its J curve, because you finally got a very significant government saying, Bitcoin's fine by us, crypto's fine by us, so the US. So you could argue there you've been working very, very hard to make progress, to make your crypto concept legitimate. People buying and selling things with it, getting paid with it, prepared to accept it. Now you've got suddenly people prepared to say, this can be a major investment class on my balance sheet as a small company, even though I'm a miner or I'm a web company or whatever I'm doing. That you've then suddenly got a broader adoption. So you're right at the beginning of that. If you believe that's the case, then you could easily start rationalizing that, well, it's 20x, it's 30x, who knows? I would say on a shorter term, though, you've got a volatility issue. So my gut feel would be that at 20x, that is pretty high, and you are assuming everything's going to go right. You are assuming that we are at the base of the J curve, and you are assuming that J curve is going to be pretty rapid over the next 36 months. That's a lot of things to assume. And you may well be right. And 20 may look damn cheap. If that's really where we are, it may be more like 100 is correct. However, the balance of probabilities are that is way overvalued. And yes, I'm absolutely in favor of asset classes that can say we trade at greater than our NAV. I mean, that is how it should be. It's about the potential of the asset, what it can bring, not the mark to market value of the asset, which is what's happening when people are trading at one NAV and below. They're basically saying, well, we don't think you'll be able to sell it for that amount in the market anyway, so we don't trust the accounting, or we don't think there's a liquid market, etc. That's what happens with the discount of NAV in theory. So yes, I'm positive about it. I think 20 times is justifiable, but you have to hope everything's going to go right. Therefore, Are we close to 5 to 10 as a reasonable multiple on an exciting unknown that has great growth potential? That seems a bit fairer to me.
But I think the reason that some of these stocks have tumbled is not because maybe people were upset, that the 20 or 30 figure was a problem. It was the way that the shares, when they were 3p, they went from 3 to 6, so they raised money at 6, then 12, then 18, then 24. That that sort of like shooting yourself in the foot, right? You're getting much, you're getting the cash in to buy Bitcoin, but you're creating a pyramid of shareholders, and you just need one or two at the top to. It's like a sort of house of cards. It's a house of cards, right? It's not even a pyramid. It's a house of cards. So just one guy at the top that says, "Oh, I'm going to get out," and you're left high and dry. I think Smarter Web had on the last raise at £4.90. Sorry, the second last raise at £4.90. So the shares have gone from 2.5p to eventually they went to £6. SmarterWeb raised 3.8 million from a strategic investor. The shares closed, and this was like about a week ago. I can't remember. Time flies and everything. The shares closed at £1.97, I think, on yesterday, Friday. So that guy is not he's not a happy bunny. I mean, he's seen the price of his property in Mayfair go down by half. He's seen the price of his investment in Smarter Web go down in just a few days. That is a horrible pressure on the stock. So, but I think the enthusiasm to raise money at ever higher prices is obviously ever higher prices is supposed to be the way to go with the stock market. You list at a certain price and you keep raising the higher prices. But to go that sort of nuclear on it and do it every 3 days or 4 days is unprecedented. And I just think if you are a CEO of a company in that area, you've got to have the experience and maybe the discipline to decide when to take your foot off the gas in terms of raising money. I think that's really been the issue there.
I
But
would agree entirely. I mean, because you're having to rewrite the justification at every point, which they're clearly not doing. It's chaos, essentially. It looks extremely opportunistic. And do I want my company manager to be opportunistic? Well, I want them to have that skill, but do I want them to be strategic and tactical? That is completely what I really want from them. And that does not look like strategic. It looks like opportunistic, maybe tactical if you're generous.
well, luckily or unluckily on that note, Christopher, we are out of time, and probably just as well, given the nature of some of the discussions here. I'm not sure how much will actually not how much will
Make it to the cut.
and yes, exactly. Avoid the cutting room floor, but I will leave that with your editorial judgment. But in the meantime, thank you very much indeed, Christopher Nicholson from ACF Equity Research.
Zak, my pleasure as ever. Talk to you soon.